Good morning, everyone. So ES is just a touch below last night's close. They're at 64.55. There should have been some prior support, but the inverse head and shoulders that was forming has failed, and is now retesting the trend. If that gets rejected, you would look at a retest at 64.31 to confirm breakdown. Breaks out above 64.55, looking to 64.74 for resistance. Mm. Obviously, Trump fired Fed President Cook vis-a-vis social media yesterday. Once again, throwing the bond market into turmoil with the question of if the Fed actually has any independence. Technically, he is allowed to remove Fed board governors with cause. However, allegations are not cause, so it's a little bit muddy and made up like most things he does. Um, on that note, correlation continues to turn down in this morning's session after reversing, obviously, very hard last Friday. It's been started turning around yesterday. It's pretty continuously dropping off. Commodities are running. Bond volatility still hasn't gone anywhere. Leverage at the top end of the carry is kind of grinding up, but the low end down, and demand for long volatility has been picking up. As far as like out of the money put interests, not very high. Um, breadth is breadth is still pretty tight, but I would say 50 and 20-day movers are tracking a little more closely than they were in the prior rally back in July. And then correlation between VIX and or VX and cash VIX has been dropping pretty steadily over the last several days now. And Fed funds futures are back to almost pricing in the same amount of rate cuts they were at the beginning of the month. Bear steepeners picked up quite a bit, almost up at 60. So we're starting to see steepening in the yield curve. On the daily side of things, technicals, which I didn't get to cover this week. Sorry, the back injuries kind of kept me from doing this every day. Um, Obviously, we hit some resistance on the 2022 trend here. Rejected off of that yesterday with the lower high. Out here on the daily, we'd probably be looking around like 6,400 for support, but support higher here at 64.27 would probably be bullish. EMA 30 is down at 63.52, which we failed to break on the last downside move. So that's also moderately important. Let's switch over to Gamma Strike. Give me a second. So we've got Gamma Neutral moving up and Delta Neutral both moving up pretty sharply yesterday. There's a drop off in skew adjusted Delta, and Gamma fell back off again with the drop of price into close. Um, it's still just holding just above Vega neutral. On the SPX, skew adjusted gamma, delta still not going positive there, but gamma at around like 17 billion, so a little bit supportive. The neutrals are mostly moving up across the board there, but not really quickly or anything. Quite a bit of negative. Oh, can you guys see that? Okay, quite a bit of negative gamma at 64.40, 45. Um, that makes almost the entirety of that range pretty hard to lose. So from here to here, price is likely to get stuck. It will be hard to push back out to the upside, but a breakout above 64.45 is probably bullish. With resistance from 64.50 to 60. Very much the same place we had resistance yesterday. To the downside, 30, 30 and 35, or is that 25? 25 and 30 will need to be lost. But if they are, then gamma can fall off into 6,400. On all expirations, not much different. There's quite a lot of gamma on the 0 DTE, but I would say breakout at 60 opens up like 75, and the push down to 6,400 looks a little bit better out here too. But that's just, extra gamma at major levels. Into the end of the week, Delta turned a little negative, broke down to the upside. There's still some positive Delta south of 6,400, but not a lot. So it'll probably be kind of hard to lose the 35 to 50 range. Charm on the 0 DTEs. Charm's a little rough. If we fail to regain 40, 45 by the middle of the day, the effects of Charm could start to take over a bit. Obviously, they get a lot worse under 410, 6,400. If bulls get this back over 64.60, they'll probably stabilize on their side. So I would probably watch those levels. That. Gamma curves steepened a little bit more, and the peak of gamma exposure shifted slightly down from yesterday's 65.50 down to 65.30. There's some low spots in gamma forming out of the money. Volatility side, we got an implied move today of 53 points. Decent amount of gamma packed in today's expiry. Delta 2. Oops, this is the wrong fucking... Never mind. Ignore that. Negative gamma for today. So a lot of range, potentially for price. Negative delta too. Oh, it's not looking so hot. Pre-market price right now is 64.35 going into open, which is a little bit on the bearish side. I'll take a look at market macro. Looks like the 25-20 support's going to be pretty important, and then 40-45 resistance to the upside. Oh my god, this takes so fucking long to load. There we go. Go back a day. Looks like more put delta picked up under spot. Leverage started to increase again. Out of the money call delta also picked up though. It's pretty far out of the money. It's like all the way the fuck up at like 8% above spot. So maybe just sold calls increased yesterday heavily. Puts started to pick up a little bit of delta, and then also some in the money and out of the money put delta increasing. And anything interesting here? Put interest on SPY's kind of gone up a bit, but that's about it. All right, ding ding.